Broader numbers, I think you have seen. We have grown well, both the overall business also and the credit 11% growth is there. Deposit, this was a conscious decision of the bank management that since we had 72% of the CD ratio, so we had enough room to grow in the credit side with the existing deposit base of 8.5%. And we have grown at 8.5% in this particular quarter. Coming to the NIM decline, I think one reason is definitely that 25 basis point cut which has happened in December quarter. That has really impacted. But another important reason is that repricing of the deposit, which we are expecting to be over by April. 70% of the deposit which we had mobilized under 7.25 and 7.75 per senior citizen in the last year, that amount was 2,48,000 crore total deposit which we had mobilized. And 70% of that is repriced up to 31st of December. 21% is going to be repriced in this particular quarter, that is the Q4 of this year. And around 9% still it will be remaining. That will be, entire thing will get over by 15th of May. So that is one of the reasons. I think still my cost of deposit, the way we were expecting that it will decline, it has not happened. And another important factor that keeping the dynamics and the customer, the interest in mind, we had not reduced the deposit rate in the Q3. See, 125 basis point cut has happened in the last financial year. But to that extent, we have not reduced the deposit rate, keeping the depositors' interest in mind. And that has also impacted our NIM. But keeping overall profitability which we had and visibility was there in this particular quarter, that operating profit also was good, net profit was also good. So we kept the deposit rate a little bit higher. And we have revisited our deposit rate in the month of January. And around 20 to 30 basis cut we have given in the different segment. So I'm expecting that definitely some improvement will happen. But from 26-27 financial year onwards, you will see the real positive impact happening on the NIM.
Okay. And Mr. Chandra, how should one look at the bank going forward as well? If there is a repo rate cut, will margins continue to remain subdued? And what happens to that 2.8% guidance, which you reduced to 2.7% as part of our conversation? You reduced that, you trimmed that guidance. Do you believe that you'll probably miss that and there'll be a negative bias to that number as well?
See, overall for the entire year, if you see, we are still at 2.75.
Okay.
But I think 2.7, which we had indicated, 2.7 to 2.8 last con call. And I am still expecting that overall for the entire year, it will be somewhere around 2.7, because as of now also 9 months it is 2.73. I think definitely NIM, we are mindful of that and we understand what are the challenges which we are facing it. We have recalibrated our deposit rate, and going forward we will see again. ALCO meeting will happen at the end of this month, and again we will see that what has translated in the deposit front. And another important aspect which the bank has implemented in this financial year, that low yielding advances, we had some IBPC and some other low yielding corporate loans were there. That also we have started setting that. And all those things impact, I am very much sure that it will be visible from 26-27 financial year onwards. But I think we are holding to the operating profit which we had given the commitment, net profit commitment, all those things we are going to maintain, and the guidance which we have given in the beginning of this year, all those parameters we are going to achieve.
Right. Talk to us about also the provision which you've done, the floating provision you've created for ECL. Why the need for doing that in Q3? Talk to us a little bit about the timing of this. Are you trying to ensure that you calibrate your ROA at 1% and start taking an impact of ECL upfront? Is that the thought process? Give us that piece.
Yeah, see, we had the diluted the Canara HSBC, the listing had happened, and we got 952 crore out of that. So this was the right time for us to see that any extra profit is there, whether we can park it as a floating profit, floating provision, so that can take care of my ECL transmission, which is going to be effective from 1st of April 2027. And as of now, this quarter, we have made 955 crore provision. And as of now, we have 1,775 crore the floating provisions are there. I think definitely that will take care of my ECL transmission. So this is a very calculated the move of the entire top management of Punjab National Bank. And we always expect that there has to be consistency in all our performance parameters, including the profitability. And that we will maintain not only for 1 or 2 quarters, the years to come now.
You'll start factoring that in from FY27 onwards. What does this do in terms of you recalibrating profitability? How much of a knock in terms of ECL? What will the impact be for FY27? And you'll largely straight line this across through to FY30, or will it be disproportionate upfront and thereafter it will start to level off? How does it play out?
See, one rough calculation we have done,
Right.
and because digital footprint is going to be in place in another 3-4 months' time. But the calculation which says around 10,000 crore of requirement will be there for the full 5 years' time for the transmission to be fully effective. And so that way means 2,000 crore will be required for every month. And already we have 1,775 crore cushion in this particular financial year itself. Going forward also, we will see that every quarter, whether we can carve out some of the profit and keep it for the ECL migration. And I don't see any major challenge happening in implementation of the ECL. And that is the reason this quarter also, we were very mindful that instead of declaring more than 6,000 crore of net profit, let us carve out some amount and make the provision so that it will take care of my future requirement.
Okay. All right. And sorry, I'm coming back to margins. In case of a repo rate cut, you've indicated that your deposit rates have already been cut for January. You're likely to again recalibrate end of this month. In case of a repo rate cut, do margins fall further or have we bottomed?
No, what we are talking about is assuming that there will not be any further rate cut happens in the system. Now, suppose further, if any rate cut happens, I think we need to revisit our yield on advances, the corporate loan book, and the cost of deposit. I think that call we will take as and when the announcement happens. But as of now, this is the strategy, understanding that there will not be any rate cut in this particular quarter.
Okay. And recovery pipeline remains solid. Are you confident of the 13 to 15,000 kind of recovery run rate for the next 2 to 3 years?
Yeah, so this year also, we had a plan of 6,000 crore of recovery, and already more than 11,000 crore of recovery has happened. Another around 4,000, 4,500 crore recovery we are expecting in this particular quarter to happen. I am very sure the kitty which we have under total gross NPA, all put together, definitely we will be expecting a recovery of between 13 to 15,000 crore for another 2 years, definitely.
And the 1% kind of ROA number that you've now clocked, is that the base? Therefore, is that what one can anticipate and you'll only build from here? What is the scope for upside? What's the levers that you will use to increase your ROA?
Yeah, that is the benchmark we have created now, because
Yes.
The guidance also which we have given in this year, we will be more than 1%. And last quarter also it was 1.05. This quarter also it is 1.06%. And I am very sure the profitability which is there in the system and the growth focus which is there on the retail agri and MSME and the way the growth is happening, I think all things put together, I'm expecting definitely it will be more than 1% in every quarter.
Okay, that's the word coming in from the management of PNB, but let's shift focus